Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, December 20th, 6:37 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with the late edition of the Revere Market Insight video after taking 2 days off and coming back and doing a video. Nothing like the audio being corrupted when you try to publish it. So here's take two. Let's get into it. So, state of the market. We're in an uptrend since the O'Neill follow-through days on November 1st and 2nd. That uptrend took a pretty stiff hit today as the market experienced an escalator up to elevator down situation, but not enough to change the trend gauge. You can see over here, market leadership. Green arrow, market leaders acting well, although clearly underperforming today, but a lot of them were extended to the upside. Short term, medium term, and long term, all five of the major indexes trending above their respective moving averages. So we got the green arrow there. Last week we got extended to the upside on the NASDAQ and the S&P 500 from their typical levels that they trade against the 21 and 50-day moving average. We brought the yellow caution arrow out. That caution came to fruition today. So what just happened? Everything was going along very nicely, trading in a tight range, trending to the upside till after 2 o'clock. We just out of the blue had a big, harsh negative reversal. One rumor I saw was that something about China threatening to attack Taiwan, but whatever the reason, we were overbought, very extended to the upside. That always resolves itself either time or through price. Today was through price. Here are the numbers on the day. The big seven down, an average of 1.3%. RG8 or 8 growth ETF composite down 2.3. S&P 500 after being up on Monday and Tuesday about 1.25%, gave that back in a little bit, down 1.47%. Equal weighted down 1.65. NASDAQ 100 up Monday and Tuesday about 1.15%. Also gave that back in a little more, down 1.5. Equal weighted down 1.7, Dow down 1.3, mid caps down 1.6, Russell 2000 up Monday and Tuesday by about 2%, gave a little bit less than that back. Global 60/40 down 0.67%. In-house GROTECTION, we're up Monday and Tuesday approximately 1.35%, gave that back in a little more today as leaders of all sorts were hit and the indexes took a negative reversal. Let's get into it and take a look at the charts. We'll start with the S&P 500. You can see very clearly here, giving back the gains made since the day after. You can see how I have flagged here. This was the FOMC last Wednesday. Let's go to a 15-minute chart here. And you can see this is the FOMC euphoria, the gap up the next day. Harsh pullback intraday, but it held at 46.94, and this low is still in place. Trending inside day on Friday, trickle to the upside Monday, Tuesday, and half a Wednesday, and then give that all back in one fell swoop. The market does not always treat the participants kindly. Basically, we're sitting on the 8-day exponential moving average, which is a normal pullback. It just hurts when it's that abrupt and that quick after you're racking up gains, but we know historically that's why the yellow caution arrow is out. NASDAQ 100 giving back 3 to 4 days of gains, also sitting on the 8-day exponential moving average. Dow Jones Industrial Average still above its 8 EMA, although giving back 4 days of gains. MDY mid caps have been leading, big outside negative reversal today, but still above the 8-day exponential moving average. Small caps, big outside negative reversal over the last 4 days also, but still above the 8 EMA. So those are the 5 major indexes. VIX, big spike today on the afternoon, whatever you want to call it, breaking above the 21-day moving average, up 9% on the day. I'm going to show a chart of the dollar, but it doesn't matter because it hasn't been fixed by MarketSmith in this distribution. But the dollar was up 0.44% today. Let's look at the metals complex. Gold down 0.5%. Gold stocks hit a little bit harder, down 2.4% after some nice gains since Jay Powell and the FOMC last week. Silver eked out a tiny gain. Bitcoin was rallying strong today and held on to most of the gains, but closed at the bottom of the range, up 2.4%. Bonds prices up, yields down. Bond prices making higher highs, up 1/3% on the broad bond index TLT, up 0.68%. That's the long bond, which means the long yields are down, lower low there on the 30-year, and TNX down as well, down 1.15%, making lower lows. So that's your inter-asset correlation. Let's go to the tail of the tape. And from up 8 out of 9 days on the S&P to 1 day down, basically resetting the 8 EMA as we closed right on it, but still 34 straight days above the 21-day moving average on the S&P 500. 10 o'clock December consumer confidence was above expectations. That spiked the markets a little bit. China Taiwan rumors was about the only thing that I saw that would cause the harsh sell-off. But when things get extended, you just need a little bit of a spark, and the sellers take it from there. Several changes to the portfolio. We did a couple of minor adds Monday and Tuesday. Did some trimming today, both offensive and defensive, taking our beta down from 1.75 to 1.26. We'll take a look at these when we go through the charts, but the bottom line on the day, with 11 out of 11 spider sectors down, it was an elevator down day, broad sell-off from overbought, gives back the last gains from 3 to 5 days. So compare any holdings that you're interested in to that pattern on the S&P 500 to see if you're outperforming or underperforming versus the close last Wednesday. That's kind of the benchmark that we're looking at. So here's what we did to the portfolio today. First, coin got extended, +4 ATR. We sold half of that for over 20% gain, still holding a quarter size position on that. Then some defensive selling, closing SSO. CCJ, this is uranium, just didn't work out. Nice relative strength, consolidation, up and down, but broke the 21 yesterday. We sold half yesterday, sold the rest of it today. Still holding the 50-day moving average, but sold for about a 4% loss. UWM, we trimmed that on the negative reversal. That's the small cap index. And then some defensive selling. Snow, trimmed our last couple of buys that went break even below the 8-day exponential moving average. You're going to see this a lot. Things have been trending up above the 8 EMA. Broke it today, and the 8 EMA starting to roll over. Now you want to see if they come down and touch the 21 and bounce. Does that 8 EMA act as resistance on the way back up? Ideally, we don't even want to come to the 21. We just want to regain the 8 tomorrow and continue to move to the upside. That's best case for the stocks. Worst case would be a visit to the 21, a bounce into the 8 that fails, and we'll be tightening our stops and getting stopped out and trimming some gains if that happens. ESTC, same thing, held the 8 the last couple days, couldn't get back above it today. Closed for about a 4% loss on a partial sell. And those were the two. So we closed CCJ and trimmed those. Let's quickly take a look at the rest of the portfolio. We bought FCX on Monday. And underwater on a quarter size position by a couple of percent on this negative reversal along with the market. LYV we bought last week, down slightly on this on a little less than a half size position. Path breaking the 8 EMA. We're about even with this one, I believe. AMD we added on Monday on that attempted breakout or reverse. So we've got good gains on our first buy. That little add yesterday is now underwater. GTLB, negative reversal, closed below the 8 EMA, but we're still holding gains on that. NVIDIA, just going through the portfolio here, holding the 21-day moving average. All of our positions are positive on that. CROD, we trimmed some of this on strength last week. It's still holding the 8 EMA. Still have nice gains on that. I talked about coin, ESTC. Talked about getting stopped on that. Let's show the chart again. You see breaking the 8-day exponential moving average in some of our biggest positions. Snow broke the 8 EMA. We trimmed some of that as well. And our GU, our last buy, down a couple of percent, but the first buy still firmly in the green. That's a portfolio review, and I think I'm going to wrap it there. I will show one more chart. Affirm, probably the leading growth stock that just took off after Thanksgiving. Big negative reversal today, down 9.8%, but still above the 8-day exponential moving average. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. You can also comment on YouTube. We reply to all of those. If you're interested in becoming a client, my partner, Dan Stewart, can be reached at dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Reminder, it's not how much you make in the market, it's how much of that you can keep. We've been growing assets by being very involved in the market during this uptrend. First shot across the bow today with the hard break, giving back 3 to 5 days gains. Was it a one-day event, or is there more to come? That's what we'll be watching, along with how our holdings act versus their 8-day and 21-day moving average. And with that, I'll wrap it up for Wednesday, December 20th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.